Are Tesla investors facing buyer's remorse, or is the stock still poised for long-term gains? After tracking and trading Tesla stock for years and seeing its wild fluctuations, I can understand why some investors have second thoughts today. In this video, we'll discuss whether or not Tesla's next big project, the robotaxi, turns regretful investors into long-term believers. We'll also discuss, will Tesla's ambitious promises ever deliver on its autonomous driving goals? And finally, have buyers found the right support today after this big gap down at the 50-period moving average? Let's get into it. Hey, John, how's it going?
Hey, good morning, Pete. How's everything going with you?
I'm doing good. We're about to talk about the stock on everybody's lips this morning, which is Tesla, and whether or not he laid an egg or he's just setting the stage for the future. Everybody doesn't happen to know what we're talking about right now. We're basically talking about the big robotaxi reveal.
Yep.
And I don't know about you. Look, I mean, the guy's one of the wealthiest, if not the wealthiest person in the world. So it's really hard to say anything negative about him at this point. But
well, you never want to bet against him, that's for sure.
He's starting to act a lot like every other tech entrepreneur that basically just keeps putting promises out there, and he hasn't really delivered on anything. He hasn't brought out the lower price cars they promised. This robotaxi they tested yesterday in an empty studio parking lot, which is supposed to be showing off the the self-driving car with nobody in the area. I don't know. I'm not sold on Tesla right now. How about you?
Yeah, it amazes me. You know, you never want to count this guy out because he's had so many obstacles in his life and his career. You know what I mean? And he always seems to somehow end up on top, or at least, you know, obviously being successful. But this was a huge disappointment. I think that if you look at all the hype that was kind of building into this announcement, it kind of reminds me of the Cybertruck back in the day when that first started, like when he first had that video of him shooting the steel panel there on the side. It just seems like there's always a little bit with these presentations. There's always like the hype leading into it, and then kind of like the letdown afterwards. And I think that it almost becomes a tradable pattern where you kind of get the hype going into a potential new business unit or a new revenue stream, right? And then all of a sudden it just disappoints because in real life, you know, these things that he's trying to accomplish are fantastic, but they're very difficult to execute. Having a robo-taxi, you know, there's a psychological aspect to that too. Even if they work well and they work perfectly, you know, what's the psychological impact of having an unmanned vehicle tote you around? It's one thing to have a robot food delivery, but it's another thing to actually be sitting in a car that's not manned by anybody. I think that takes a little bit of a leap of faith. And I think you have to really, really prove yourself, at least for me. Maybe younger generations are okay with that type of concept, but for me, I'm not getting in anything unless I know it's 100% safe. Yeah. So you know, that with the Cybertruck recalls that have come out recently, I just think that there's just more bad news ahead than good news. And the stock really reacted to that today. Although it has found support at that 50-day moving average, we'll see if that holds. As a day trade, it really is. And if you look at it has a nice, you know, if you look at the 5-minute chart, it's not even tradable intraday because it's just kind of sitting at VWAP. So basically, there is some support there. I mean, someone or something is stepping in and buying it at this level because you can see it kind of flatlined all day long. And really, since the opening move at 9:30, it really hasn't done much. So someone's buying it.
So we spent some time in our game plan meeting this morning talking about, you know, how tech entrepreneurs do things. They basically, you know, put out what's called a minimum viable product. They try and get out, and the whole point of that is to get feedback. And, you know, we kind of circled into 3 different entrepreneurs this morning. We were talking about, obviously, Elon Musk. Then we were talking about Steve Jobs. And then we were talking about Elizabeth Holmes from Theranos. And you know, a lot of people compare Elon Musk and, you know, Steve Jobs because of the, you know, Walter Isaacson books and, you know, visionary entrepreneurs and whatnot. But Steve Jobs wasn't building something that people are going to be going 80 miles an hour or 90 miles an hour in. such as this. And, with Theranos, I'm comparing them a little bit more for this particular product to Theranos, which was the blood drop, which everybody said at that point, which still can't be done, that it was dangerous to be telling people we're going to cure you, we'll find what's wrong with you based on one drop of blood. And she went to jail for it.
Yeah.
And I'm not even implying that. So I want to be super clear about that. I don't want to be misquoted here. But there's a difference between a minimum viable product that's an app or, a cell phone or something like that versus self-driving cars.
Yeah, there's a life or death situation here. You know what I mean? And there's a big difference between Steve Jobs going up to his engineers and saying, I want to listen to all my music in here. I want to have a computer in here. You know what I mean? And I want to do all these things in here. What's the worst that could go wrong? You know what I mean? They just don't succeed. So his vision was a little bit different. Elon Musk, I think, he wants to change the car industry, but I also do feel there's a distraction. There is a distraction factor too. So I definitely wouldn't count the guy out, but I think that when you have, you're trying to build rockets, which is great. You're trying to build self-driving cars, which is great. You're trying to, change the whole driving industry. You got a lot going on. You know what I mean?
He's also got X.com. He's got Beyond, what's called Boring Company. He's got solar stuff going on. I mean, I know that there's other people managing them, but I could tell you as somebody who's been an entrepreneur for 35 years right now, it's hard running one company.
Yeah. And that's the thing, he at any given time, he might get his eye off the ball. And when it comes to this kind of stuff, when you get into the self-driving world, you really need to have your eye on the ball, like you said, for safety reasons and for everything else. And I think the stock is reflective of that. And the stock market, I always say this, for new traders, this is a great lesson. I think the stock market in general likes to kind of figure out what's going to happen next. They're always looking 6 months out, 9 months out. So all the hype going into this, hey, he might really come out with something fantastic. He might come out with this amazing thing. It might be, and the results are going to be on this date. So all the hype was kind of going in there. And then all of a sudden you have this a little bit of a letdown. People are calling it pretty much a non-event now at this point. So it's kind of a sell the news event. And that seems to be a pattern with him when it comes to like the Cybertruck, when it comes to whenever he does something new, let's say. But then, a couple months later, sometimes there's good news and then the stock recovers. So it almost becomes, like I said, a tradable pattern where you trade the hype going into the news and then you sell off the day before the news. And then you buy it again, thinking there might be a recovery. So I'm not saying jump into Tesla right now, but someone is, there is buying at this level because it did drop about, it's down about 7.6%. I think at worst it was down about 8% in the morning. So it's really kind of holding steady. If that continues for another day or two where it finds a little bit of a flaw, maybe it is a chance to kind of, as a swing trade, kind of buy the dip and see if there's a little bit of recovery here.
So the question is it a car company? Like he's relying on all these other things that aren't just we're not talking about him selling more cars.
No, that's the problem. I think the real hardcore Tesla stock owners see the whole company as just a data company or as a software data company that has all this information about cars and driving and habits and human behavior. And that's worth something. There's an intangible value of that, what that price tag is for billions and billions of hours worth of driving history. I think there's something to be said about that, but it's kind of hard to quantify in a model. And I think that's where the valuation issues come in when this news type events happen. The models just don't know what to do, and that's kind of where we're at right now.
Well, the upside is the stock really hasn't sold off that hard. I mean, the entire market sold off in this period after the pandemic, but the stock really hasn't moved since then. So,
yep.
What is the catalyst right now for you to say, I want more of this stock?
Yeah, that's the problem. It's just news hype going into a new product line. Now, it has to become a show me story at this point, where these self-driving cars start to take hold, self-driving trucks start to take hold. I'll be honest with you, if I'm driving on the highway and I see a tractor trailer next to me that doesn't have a driver, I'm going to freak out. Like, I think
Yeah.
maybe, again, it's a generational thing. I'm just not used to that. That is the future.
Although
But
we are the generation that didn't wear seatbelts because they weren't
that's
low.
true. And if you think about it too, like, what about, like, I mean, a whole industry changed in just 20 years time when you think about the horse and buggy versus the first cars that came out. Like, cars used to be really expensive, relatively speaking, back in the early 1900s until Henry Ford came along. And if you kind of look at history, a lot of people were against that too. The whole industry, blacksmiths and stable owners and horse food, I mean, that was 100 years ago, but basically a whole industry changed in the matter of 20 years. So the same thing might happen again, where, another generation, like maybe my children or my children's children, will be completely fine with getting in a car with a robot and just kind of letting the robot do its thing, knowing that the robot has so many billions of hours worth of data that they won't make a mistake.
My brother recently was in Arizona, and he drove one of these robo-taxis from the airport to the hotel he was staying in, him and a guy he was working with. And it was maybe 2 miles. And he said even just 2 miles, he was scared out of his mind. They weren't doing any more than like 50.
Yeah, it's creepy. You know what I mean? And I think for our generation, we'll always think, I don't think it's going to change. I think it's hard to change human behavior. I think maybe Elon is thinking, 50 years into the future. And that's kind of how he probably does think, you know what I mean? In order to be so high tech and such an entrepreneur that he is, maybe he doesn't care necessarily about the bottom line as much as we would as a trader or as an investor. You know what I mean? He's thinking of just humanity. And that's great, but there's a big difference between being a CEO and trying to get some profits and being this catalyst to change the world.
He actually is very different as a CEO, because even last night he was telling people, after the initial reports came out, he was telling people, if you don't like it, sell Tesla stock.
Yeah, no, he doesn't care. He really doesn't care.
Goes out there and says, dump my stock. I mean,
he really doesn't care, and that's that's hard for Wall Street to kind of comprehend.
Yeah,
most people are driven by profits and by money and by success and legacy. He legitimately thinks and he has changed humanity in some way. And I think that was when he bought X. It was the same thing. He's a big First Amendment guy, and he felt that maybe Twitter was going in one direction, and his opinion was, "Hey, listen, I'm going to change this." So, but he didn't care. And every analyst on Wall Street at the time said that he overpaid. Everyone was like, it was a ridiculous price. He overpaid, and they were criticizing him for it. And he's yet to, I guess, make a profit on his investment, but he doesn't care is the point. And I think you have to separate as a trader or as an investor. And this is where it's very similar. You kind of have to separate the difference between the entrepreneur, the man, the individual, and the company. You know what I mean? And right now you have a car company that has a lot of personal data, about driving habits and about driving in general. And can that be monetized in a way that makes that company a going concern against increasing competition from BMW, from General Motors, from everybody? And is it going to continue? I don't believe that the first mover advantage is going to be sustainable for this particular situation. I think that eventually other companies will and are already catching up with him.
Well, Boyd is the biggest. Boyd is bigger than them.
Yeah. So a lot of there'll be a lot of that stuff in the future where he'll just get kind of market share will slowly start to kind of get clipped away from him.
The short term with Tesla down this morning, Uber and Lyft seem to be getting a bounce basically off of the news. I wouldn't be buying it here at all. It's up 9.5% this morning through some pretty big resistance levels. I'd be more inclined to be looking for this to pause a little bit to reset an optimal entry. But very similar to what we talked about last week with energy versus airline stocks. One goes up, the other one generally goes down, and we're kind of playing these off of each other right now. Both of you guys got a lift, no pun intended, today. Looks like though.
Yeah, those are your pairs traders out there trying to make a buck, and we'll see how long that correlation continues. That's usually what happens.
So speaking of the market discounting things into the future, We keep bringing up, you can't fight the Fed. The Fed did what it was supposed to do, if not more. It sure seems like that maxim is as strong as ever right now, because there's literally very, very little selling going on right now, other than a couple of biotech stocks right now. I'm working really hard to find ideas on both sides of the market right now. Bearish side, even to put on a hedge, doesn't even make sense at this particular moment.
Yeah, we broke out to new highs out of that 2 week range that we were in. And finally, we broke out. There was enough energy to get things going. And I had said a couple of weeks ago that earnings might be the catalyst to break us out of this range. And that's exactly what happened. The banks came out and they reported favorably. And I think there was earlier concern that some of these banks might not benefit from lower rates. But apparently, the market thinks otherwise. So that's pretty much what's happening. And if you think about it, the large banks like Wells Fargo and JP Morgan, well, especially Wells Fargo, they're in the mortgage business basically, and with lower rates, it'll attract more home buyers and it'll attract more home sellers. So I think the housing market will slowly improve there, and I think these larger banks are well positioned for taking advantage of that. On top of that, some of these larger banks like JP Morgan, there's been a lot of lack of deals going on, like IPOs and mergers and acquisitions and stuff like that. And I think that with lower rates, smaller companies that historically have a harder time borrowing will benefit obviously from a lower rate environment. And I think M&A and IPOs will probably start to pick up going into next year, which is why I think another reason why some of these banks are kind of bouncing a little bit today.
So banks, earnings, don't fight the Fed. Tesla, as of right now, laying it dud with the robo-taxis again. Who knows? One thing we're not lacking for right now is volatility. We had a lot of people talking about in the game plan this morning about different headlines and whether or not we should or shouldn't be actively trading between now and the election. Now, you and I have pretty much the same opinion that institutions are probably not going to take large positions, especially no matter where you read right now. Again, we don't have a political affiliation here, but the race is pretty tight right now. It's a toss-up no matter what channel you watch right now. And that indecision is spilling over into volume has not really been awesome. Even on the day the market broke out yesterday, volume is only 70% of normal.
Yeah, it's funny when you have a 50-50 race like this, and volatility, you would expect volatility to increase because nobody knows which direction certain sectors might favor one candidate over another. And the institutions really don't know what to do at this point. So what they are doing is they're hedging. They're hedging against a pullback or a corrective action going into the end of the year. And, that doesn't necessarily mean it's going to happen. It just means that's how they're kind of preparing themselves in case there's uncertainty, or maybe there's an indecision on November 5th. It might take another week based on, mail-in. If it's really close, we'll get mail-in ballots and stuff like that. So there's a little bit of uncertainty as to the timing as well of what the result might be. So all that uncertainty is why the VIX is so elevated. You also have geopolitical risk on top of that. You have what's going on in Iran and Israel, which could spill over at any time. So I think those two factors is why the VIX has been elevated for 2 weeks now, and it has continued to make higher lows. And I think that probably will continue into the election cycle, and I think that's just the way it's going to be. I don't think the market really even cares what the end result might be in the election. I think the market just wants to know what the end result is.
I 100% agree. They just want a decision.
They want that to just the decision to be behind them. Historically, the stock market tends to not care too much. What they do like to see is balance of power. If you do a study, you'll see that if you have a Democrat president and a Republican Congress, that usually works out okay. You get a Republican president, Democrat Congress, that usually works out okay. What the market doesn't like is uncertainty, and what the market historically has not favored is a one-party system. And that's something also to think about going into the election. But other than that, the market doesn't care usually. They just want to be over with. It's just one less thing to worry about once the answer is in front of them.
So the top two sectors I'm watching right now, based on the way things are unfolding and with earnings, technology has remained strong. NVIDIA is not the beast it was, but
Yeah.
technology, software applications, and software infrastructure stocks have been dominating our community research and stocks in play. So we're going to be focusing on there. I think it's very important to get to a point where like this is where I think the opportunity is. So technology has been strong, breaking it down into those two industry groups. But then financials lit the house on fire this morning. It's going to be interesting to see if they stay that way. But so far, with giant green candles after the earnings announcement, that's a pretty good indicator that we should be moving some of our attention and probably some of our capital heading over in that direction as well.
Absolutely. So you'll get more of them reporting as the days and weeks follow. You'll get the asset managers as well as some of the mid-sized banks, and we'll see if they fare as well as the large banks. And I think they will. I think, smaller companies will benefit from a lower rate environment. And I think as we move forward into next year, we'll start to see some of those benefits.
Small caps took a little bit of a hit yesterday with the CPI number that came out, which that's a whole other conversation where all of a sudden CPI is not the way we measure inflation anymore when it was for 100 years
Everybody
or whatever that time frame was.
Yeah, everybody was glued to their screens with PCE and CPI, and now it's largely ignored. We had actually somewhat hot numbers come in this week, and it got largely ignored. I think a lot of it is okay. We're in an accommodative phase now, so who cares? That's what, and the market always says what's happening next, what's going to happen next, and that's right now. What is the Fed going to do? The Fed's going to continue on their path of lowering rates, whether it be 50 basis points or 25 basis points, is the argument now. So it's not so much are they going to stop, it's a matter of how much they're going to cut. So I think CPI, it's kind of like a ho-hum now at this point. And that's just the way the market is. Sometimes economic data is scrutinized during certain periods, and then in other periods, they're largely ignored. And that's just the way it goes.
So speaking of that, obviously, unemployment numbers were much, much higher than expected. And that got ignored again. The market took off. It rocketed higher. The justification for that was, unfortunately, that happened because of the two hurricanes that have happened recently.
Yeah.
Where people have just, had no choice but to do that and hope everybody's safe.
Yeah.
So again, you got to put it in context. You got to put the much higher unemployment number in the context of what just happened in the southeast of New York, in the country the last couple of months.
No, agreed. I think employment just got to pass this time around because of what happened. So again, looking for patterns as opposed to like one-offs. We'll see if that trend continues, but my guess is it'll probably snap back to the way it was.
I would think so, because the actual non-farm payrolls have been pretty good. And in fact, last week it blew it away.
Exactly. The only thing I think there's some consumer confidence was a little bit low, but again, it could just be the state of affairs. You know what I mean? So I don't put too much confidence in confidence numbers because a lot of it's psychological.
Also, the amount of people they poll is ridiculously small.
Yeah, exactly. So the real numbers, the PCE, CPI, and the employment numbers, those are always kind of the bread and butter,
So financials and technology is a place that's going to have my focus. Basic materials was strong for a while. They just kind of faded into the background. I'm not in that at all right now, although Alcoa did set up pretty well this morning. You have anything in particular you're looking at right now?
I think I liked actually going into this week. I like communications also. So I was looking at Disney. Disney actually had a pretty good day today. And it looks like it's kind of like, it's been in this long-term downtrend for so long. And now it's finally broken its downtrend. So I really like the fact, I like where it is now as an entry point. I think, as an options trader, one of the things I do is I don't expect too much out of the markets in the next couple of weeks, like we've been talking about because of the election cycle that we're in. So if you look at that chart right there, I only expect, if I'm going to enter Disney at a level like this, I'm only going to expect it to get up to that last point of resistance where that dotted line is right there. And that's my trade right there. You know what I mean? I'm just going to pick a spot where I'll go long call options currently at the money. And I go out about a month and I'll sell some premium, maybe a little bit above that dotted line to try to put together a spread trade. And those type of trades that's been my bread and butter for the last couple of weeks because, I want to be bullish because the market is still bullish. but I'm not expecting too much because the market is making new highs, but then pulling back, and then it based for those 2 weeks. So again, not expecting miracles here until we get some clear-cut direction.
All right. So I got financials, I got technology, I got wait and see on Tesla. It was not a good move today, but like John said, it's still kind of hanging out, going sideways. And again,
And
don't
Mickey
fight the Fed.
And you got Mickey Mouse.
And Mickey Mouse. Mickey Mouse is on the table right now. All right. All right, John, thank you so much. Have an awesome weekend. I'll speak to you soon.
All right, Pete. Great talking to you.
You too. Bye-bye.
Take care.